Welcome to today's video, how to be a better investor. If we can be good at our investing, we are going to make so much more money because we are making our money work for us instead of us having to always work for the money. Today, I'm going to share my best tips and strategies on how to become a better investor. So let's dive right in. All right, I have been investing for a while now, so I want to share my tips and strategies with you on how to be a better investor. And make sure and stick around until the very end of the video because I'm saving the best for last. All right, the first item I want to talk about in order to be a better investor is to keep a long-term perspective. If we can have that long-term perspective, we are going to be so much better at investing. Honestly, I have seen this in my own life. I got caught up in trying to make a quick return a couple of different times, which I'm not proud of, but it happens. But we continue to learn and get better as we go. But when I did that, I regretted it later. And so I just kept thinking, Tiffany, you knew better. Like you knew to keep the long-term perspective. And I momentarily forgot. So here I am reminding everyone to keep a long-term perspective so that we can be a lot better with our investing. Honestly, if we do not get caught up in the short-term movements of the market and keep that long-term perspective, we are going to be better investors because we can continue to invest over time. We can dollar cost average. We can buy when the market is really low. We can buy when it is high. We can buy when it's in the middle. We can average out those prices over time by dollar cost averaging, by continuing to invest our money over time, rather than focusing on the short term and trying to make a quick win, whether that's a quick win overnight or in the same day or over a week or 2 weeks or a few months. It will be so much better for us, at least this is what I have seen, if we do not focus on that short-term volatility and try to make quick wins. But if we keep that long-term perspective and know that the market will continue to rise over time. And I have definitely done this because I have set long-term goals. One of those was to become financially free. And I was able to do that in my 30s because I kept this longer-term perspective. I wasn't worried about getting rich overnight. I knew that my investments would grow over time, and they clearly did. When we are basing our investment decisions off fear or greed, we are not going to make the best decisions. If we can take that emotion out of investing and just completely focus on the long term, what our end goal is, we are going to make better choices with our investments. And one of the reasons is because if we see our investments start to fall, we are not going to panic or become fearful and sell those investments and then see the market come back up and lose out because we already sold our investments. It is more about time in the market rather than timing the market. And actually, we're going to talk about that later on. But let's move to the second item on how to be a better investor. And this one is really awesome. It is to automate your investing. This is a complete game changer. If you don't have to think about investing, if you can completely automate that, it's actually going to get done. You will actually be investing your money because you aren't relying on yourself to remember to do that. There are a lot of investment brokers out there right now that offer this automation process. We can have that auto transfer from our checking directly to our investment account. And then even sometimes we can automate which investment we are choosing. So we don't have to log into our investment account and select the investment. We can automate the whole process. And I go into more detail about this in another video, so I will leave a link above. You can check that out later on. But we can select the amount that we want to be investing, whether that is every 2 weeks, every month, every quarter, whatever works for you, and completely automate that process. This is also going to get rid of that temptation to sell our investments or to think maybe we shouldn't be buying now. We can just automate it and pretty much forget about it. Of course, we want to keep an eye on our investments, but we don't need to be logging in all of the time and worrying about our investments. We can select great investments up front and continue to invest in those over time. Going along with picking your investments, this is part number 3. We want to diversify our investments. We don't want to just pick one company and invest all of our money in that one company, because if that one company goes bankrupt, then we are going to lose our money. We want to diversify our investments. And we can keep this very, very simple. We can invest in an index fund, which is one single fund, but it has a whole bunch of companies inside of that one fund. So it can make our diversification very, very easy. And if you want to know which fund I like, I will leave a link to a video sharing which fund that is. You can check it out later on. But we can also diversify not only in the stock market, but with our other investments as well. For example, I like investing in real estate and the stock market, so I am diversified that way too. But by staying diversified, it really reduces our risk. And like I just mentioned, I do have a favorite fund, and this is actually step number 4. We can invest in low-cost index funds. There are a ton of different funds out there, but we want to make sure that we are investing in the low-cost index funds, because these are going to have the lowest expense ratios. The more that we can keep our costs down when investing, then the more money we can keep, and we can have that money be compounding for us over time. And there are a number of different index funds out there. There are different companies that offer their own type of index fund. For example, Fidelity offers a total stock market, a total US stock market fund. And then there's also funds that follow the S&P 500. And there's even funds that track different sectors. For example, the healthcare or the technology sector. So we have plenty of options with all of these different index funds, but it makes it nice because it helps us diversify without going in and buying 1,000 different individual companies. And I personally stay away from actively managed mutual funds. They are going to have a higher expense ratio tied to them. And there have been studies done that have shown it's not really worth it, that actively managed mutual fund is not outperforming these low-cost index funds. Make sure and be aware of the fees associated with your investments. And then the 5th item I want to talk about on how to be a better investor, and I mentioned this before, but it is to not time the market, but have time in the market. A lot of people try to time the market. They want to buy a stock when it drops, when the price drops, and then sell it immediately when the price goes up. But if they bought that stock at a low price, but then the price goes even lower, and they want to sell it, they're not able to, or they can sell it, but it will be at a loss. So it's just really tricky to time the market. No one can really predict when investments are going to go up or when they are going to go down. A lot of people try to predict that, but it doesn't work, and sometimes people get lucky. They might get right a few times, but they're not able to repeat that process continually. So if we can keep that long-term perspective and have time in the market, we are going to be a lot better investors. And to give an example, I have a friend that used to be a day trader, and he was really excited about this for a while. He was making some good money, and then he had some losses, made some more money, had some more losses, and then he had a really huge loss, and he got out of day trading. It was way too stressful for him. And I honestly asked him, why did you get out if you were making money? And he said it was because of the stress. It's very stressful to watch your investment portfolio drop by thousands or even hundreds of thousands of dollars at once and not come back up. And I would agree with him. I do not want that stress of having to make a quick win in order to have money. I would much rather take that longer term approach and have that time in the market, which I know my investments will grow over that long term. And then the 6th item I want to share with you on how to be a better investor is to stay disciplined, stay consistent. And this one is really key, because if we decide to invest a little bit of money and then we completely stop, we are not going to have our money be working for us as much as we could if we continue to stay disciplined and continue to invest our money. And of course, if we can automate this process, then we are going to be a lot better off. But we really need to realize that we need to be investing our money as much as possible, as soon as possible, because we want to take advantage of that compound interest. And the more we can invest up front, the earlier we can invest, then the more money we are going to make. And that's not because of our own investments, that's because of compound interest. Let's take a quick look at a graph showing the effects of compound interest. We can see in this graph that if we invested $50,000 to begin with, and then we contribute just $500 a month over the period of 30 years at an 8% growth rate, at the end of that 30 years, we are going to have $1,291,966. And if you look at this graph, you can see that that blue color is the amount we are putting in. And that green color is compound interest. That is way higher than the blue color. So you can see the effects of investing as much as possible as soon as possible, so that you can have as much compound interest as possible. And honestly, I have applied these principles in my own life, and that did help me to become financially free in my 30s and become a millionaire at 40. And if you want help investing in the stock market, then I have a free masterclass for you. I will leave a link below in the description, and you can learn how you can work with me to learn to invest in the stock market. And I want you to comment below and tell me what has helped you become a better investor. I am curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.